Support and resistance. So what is support? Support is the price level at which prices have difficulty falling below. When prices decline towards support, the buyers are more inclined to buy, and the sellers are less inclined to sell. Demand is greater than supply at support, thus preventing prices from declining. So to draw support, simply connect at least two previous intermittent lows. So let's show you an example. So here we have the support line represented by the red line. Now to draw the support, you connect at least two intermittent lows. So we have an intermittent low here. We have another intermittent low here. We have another intermittent low here. And we also have one here. So everything is based on support and resistance. So as prices fall, buyers are more likely to buy because prices are so cheap, and sellers are less likely to sell, thus pushing prices back up. So as prices fall back down again to support, at support, demand is greater than supply, and that's why prices get pushed back up. Here we have another example of the support line. And so to draw support, you connect at least two intermittent lows. So we have an intermittent low here. We have another one here. And we have a third one here. So you connect them together, and this will give us the support line. So again, as prices fall towards support, because the prices are so cheap, buyers are more likely to buy, and sellers are less likely to sell, pushing the prices back up. A breakthrough support indicates that the bears' selling pressure has won the battle over the bulls' buying pressure. A new support will eventually be established at a lower price. So if prices break underneath the support line, it's going to continue falling until a new support has been reached. And so later on, we're going to show you some examples of this. What is resistance? Resistance is the price level at which prices have difficulty rising above. When prices advance towards resistance, the buyers are less inclined to buy, and the sellers are more inclined to sell. Supply is greater than demand at resistance, thus preventing prices from advancing. So to draw resistance, simply connect at least two previous intermittent highs. So here we have an example of the resistant line, represented by the red line at the top. Now to draw the resistance, you connect at least two intermittent highs. So we have an intermittent high here. We have another one here. And we have a third one here. So as prices rise towards resistance, buyers are less inclined to buy because the prices are too expensive, and the sellers are more inclined to sell to take profit. So that's why prices get pushed back down, prices get pushed back up again, and at the resistant line, supply is greater than demand, and that's why prices get pushed back down. A breakthrough resistance indicates that the bulls' buying pressure has won the battle over the bears' selling pressure. a new resistance will eventually be established at a higher price. So if prices break above the resistance line, prices will continue higher until a new resistance line has been reached. So support can equal resistance. So once prices break below support, the support can become resistance. Conversely, when prices break above resistance, the resistance line can become support. So let's show you an example of this. Here is an example of how support can equal resistance. So on the left-hand side, we have the resistance line. Now recall, to draw the resistance line, we find at least two intermittent highs. So we have an intermittent high here. We have another intermittent high here. So we can draw a line through it, and that will give us the resistance line. So prices went up, hit the resistance, and retraced. Prices went up again, hit the resistance, and retraced. Prices went up, it hit the resistance, but this time it has broken through the resistance line. Now recall, to draw the support line, you connect at least two intermittent lows. So we have an intermittent low here, we have another intermittent low, and we have another intermittent low. So this can be our support line. So this red line on the left-hand side is resistance, and on the right-hand side is support. Now recall that when prices break above the resistance line, it moves to a new high, and a new resistance line is formed at a higher price level. So to find a new resistance line, we look for two intermittent highs. So we have an intermittent high here, we have another intermittent high here, here we have another intermittent high. So we can connect these intermittent highs like so. And this is our new resistance line. Here is another example of how support can equal resistance. So this red line again represents both support and resistance. On the left-hand side, it represents resistance. On the right-hand side, this red line represents support. So we can also draw in additional support and resistance lines. Here we have a support line. Here we have a resistance line. Now this qualifies as support because a support line is drawn when you connect at least two intermittent lows. So we have an intermittent low here, and we have another intermittent low here. Now this is a resistance line because we are connecting at least two intermittent highs. So here we have an intermittent high, here we have another intermittent high. Now the key to trading is to find when prices break through support or when prices break through resistance. So for example, here prices went up, hit the resistance, and it broke through the resistance. Prices continued higher until a new resistance line is formed. So the key to trading is to find when prices break through the resistance line, because when prices break through resistance, it's going to move up to a new level, and this is where you make your profit. Same thing on the downside, if you're going to short, you want to find when prices break underneath the support line, because when prices break through underneath the support line, it's going to move lower to a new support level, and you can take advantage of prices moving lower.